get started. So essentially today we're looking to be covering the UK market, what it holds in terms of investment, not only for Kenyans, but investors globally. Unfortunately, or fortunately for you guys, George wasn't able to join us today. He had to handle some family matters. So just going over some of the topics that we're going to cover again, an introduction to RPA, us as a business, the services that we provide, and the benefits that we offer to clients, why investing into the UK, our outlook for 2024 and beyond. We're also going to have a big focus on Manchester, as we see it being one of the strongest markets in terms of capital growth and rental performance over the medium to long term. How the process works, what it entails to get started, and also a Q&A. So if you do have any questions throughout the webinar, please just put them in the box, and I'll make sure that I get to them throughout the webinar or at the end. But just a little bit more on RPA, who we are as a business. Just give a bit of a background. Just as a company as a whole, this is including the three founders of the business, Richard Bradstock, who's based here with me in Dubai, George Radford, who's based in the UK and heads up our African office, as well as Giles Ledbetter, who's also based in the UK. And as a company and experience combined, we've sold over 1.3 billion pounds worth of property to our clients. And although we do have offices throughout the world, South Africa, Hong Kong, UK, and the head office, which is based here in Dubai, we do have a very global outreach in terms of clients. So we're on all time zones just to ensure that we can meet all the demands for our buyers. And it's not just selling a one-off property, see you later. We manage that transaction from start to finish, which I will cover in a bit more detail over the next few slides. But just another point, which we do pride ourselves in, that 65% of our clients are repeat buyers and trust us to buy more than one property with us and really help them to build their portfolio. And just going into what I had touched on before, where we're not just selling a property and that's it. We manage this transaction from start to finish. And really what we're looking to do as a business is to help clients buy property in a safe way, a secure way, but also in a manner that optimizes your return on investment. And this is really key from the outset, where we undertake all of the research and the due diligence. So anywhere that we're looking to invest into the UK, it's not because it looks nice, there's things here. It's really down to the analytics, where we have people tracking capital growth trends, yield trends, supply and demand imbalances, government infrastructure, regeneration, and so on. So we know that when we go into an area, it will outperform the wider market. You'll always have a tenant. And in the future, when you decide to sell, there's a very liquid market for that. And apart from the due diligence on the locations, which arguably this is more important, is we do pride ourselves in working with the best developers in market. So also undertaking the due diligence on them, ensuring that they're fully funded, they have planning permission, so clients know that their interests are protected, and the developer has a track record to prove that. And that's really the sourcing side of things. But apart from that, we also manage the legal process, because all purchases that are done in the UK have to go through a UK regulated solicitor who acts on behalf of you, the client. If you wanted to take financing, i.e. a mortgage on the property, we're able to secure that as well. I know that's a common question that we get a lot from international investors. I'm not in the UK. Am I able to get financing? Can I get a mortgage? In the majority of cases, yes. Obviously, it does depend a bit more on individual circumstances and requirements, but in the majority of cases, we are able to help you get lending to finance that purchase. And once we have the properties ready, they're income producing, we have an in-house lettings and management company. So especially being overseas, how am I gonna manage this? Who's going to find me a tenant? We handle that as well. So from advertising the property, finding the tenant, carrying out tenants reference checks to ensure that it is a quality tenant, so you're not going to have issues. And then most importantly, ensuring that the funds from the rental income are paid to your designated bank account, wherever that may be in the world. And then towards the back end, 5 or 7 years down the line, you've seen significant capital growth throughout your property. We can assist in terms of liquidating that and selling it, but also, which has probably been a bit more popular from our clients, is really the portfolio optimization, i.e., we've had the good property, it's grown in value. Rather than selling that asset that's performing well, what we look to do is release some of the gains that have been made and look at utilizing that remortgage and using that as a deposit for your next property and allowing you to build your portfolio. This is just a list of some of the developers that we work with. Barratt Homes, one of the largest home builder in the UK, award-winning developer. Berkeley's Group, both listed companies. Far East Consortium, which is a Hong Kong listed company, as well as your boutique developers. So they'll operate, such as King's Crescent Homes, that may operate in different locations than the big developers are willing to go, and they do produce a very good product. So we're happy to offer that to our clients. Here's a slide that's just going on why to invest into the UK property market. And it just goes to show over the last 25 years, the UK has remained the #1 destination for property investment amongst global investors. And this quote in itself is not just from Africa. This is globally because of the tried and trusted market. There's decades and decades of evidence going back from 1945 that the UK property market doubles on average every 10 years. Just another quote. In 2023, Knight Frank came out with the majority of high net worth individuals allocate 32% of their wealth into residential real estate, just above equities. So, I mean, if their investment strategy, they're doing it, they've carried out their due diligence, it works. But just more so into the UK markets and the benefits that we see for our clients. Obviously, the first being long-term wealth generation. Over the long term, the UK, as you've seen over there, it outperforms. So from 1945, like I said, property prices doubling an average every 10 years. It does show you a very strong return on capital, but also without those periods of volatility that you see in other financial markets. Passive income being the second, especially for our international clients. They're not living in the UK, they're not working in the UK, but they may have GBP expenses. So whether it's maybe the family's living in the UK, the kids are going to go to school in the UK, they have friends traveling expenses to the UK, having an asset that provides you with very strong GBP income will help offset some of those expenses without losing money on the currency transfers, which we know is very big in Africa. Leverage. In the UK, you're able to secure financing no matter where you are in the world. So for very small deposits in some way, you're able to maximize your return on capital and use the bank's money to make money at fairly good rates. We're not at the same low rates that we were 2 or 3 years ago, but still competitively low compared to some of the rest of the world. Again, stability. This is key with the UK. It does show you consistent returns without periods of volatility, especially if you're looking at it in terms of comparison with the equity market. If you're investing in equities, they're performing very well, but you can have somebody go online, a company owner, make a tweet, and your portfolio is devalued by 50% overnight, which will it recover? Probably, but you won't have that with property. It's brick and mortar. And diversification, another key one, especially for our clients that are based in Africa. Kenya is a fantastic market in terms of property growth. There's no arguing that. But what a lot of our clients like to do, they like to make their money there. The property is growing very fast. Take the funds that they've made, look to extradite some of those to preserve the wealth into the UK. I was going through currency exposure. The UK, you're looking at GBP income, again, just ensuring that you have that stability in your portfolio and it's not only focused on certain currencies, the Kenyan shilling, which depending on the time, just making sure that you have those different exposures of currencies in case of financial downturns and currency devaluation, which goes straight into retirement planning, just knowing that you have an asset that's growing in value, providing a very strong income. So you know when you do get to that retirement age, you're in a position where you've planned, you have very good passive income to be able to enjoy the time after all your hard years of work. As well as education planning, knowing that you have income coming in to help, because school fees, no getting away from it, no matter where you are. If you're not in the UK, they're expensive. So having those assets, providing that income, providing that growth, whether you want to sell the property to fund the children's education, or just look at utilizing the income to help offset some of those very costly bills. Just before I go on, we do have a few questions that have come in. John had asked, I've never been to the UK. Am I still able to purchase property? Good question. The answer is yes. The UK is one jurisdiction that really welcomes foreign investment. So whether you've never been to the UK, whether you've never Googled the UK, as long as your income is earned legitimately with a paper trail, yes, you are able to purchase into the UK. Next question was from Sally Wooden. Do we have an Airbnb service? Yes, we do. A lot of our clients have found this to be a very successful avenue of investing. One, because they do spend some time in the UK, so they're able to use that property, depending on the location of it, from time to time while they come over, as well as let it out when they're not there. But with the Airbnb model in general, it can be very lucrative and work very well if done in the right location. Because if you are going to be using that property from time to time, most cases you're going to be using that in high season if it's a tourist location. So there will be that period when you can be earning a substantial amount of income, but you're using the property itself. So a lot of our clients have found, rather than trying to mix emotion with investment, is using those funds, looking at it purely from an investment perspective, i.e. taking that money, putting it into an investment property that you're not planning to use in a location that's growing in value, very strong rental income. So when you do travel to the UK, you have an asset that's basically paying for your trip. You could stay in an Airbnb of your choice, hotel of your choice, without being tied to that one set location. So I hope that answered that. And again, just keep the questions coming. I'll try and get to them as I go. But this chart here just shows the UK forecast over the next 5-year period. You'll see the Northwest, which we have a big focus on currently in Manchester, as well as the Midlands performing the best. Also important to note, these two figures that you see, well, all the figures that you'll see here, these are based on UK averages. So that's the Northwest as a whole, Midland as a whole. But what we look to do as a company is to dissect those locations and identify value that's going to outperform the wider market as a whole, which we'll get onto a project that ticks every box in that in Manchester itself. Just here, another graph just showing the UK property market, how it outperforms other asset classes over the long term. And I mean, there's no getting away from the Dow Jones industry, Nikkei 225, cash, gold, FTSE. There have been years where these have significantly outperformed the property market, which does come back and touches on my point in terms of volatility, because you'll find some years you'll see in some of these stock markets, FTSE, Dow Jones, you'll see double-digit results, close to 20% in terms of annual returns. But then there comes those years where it's significantly negative. So it just really goes to show that the UK is tried and tested. Can't even speak. I do apologize. It's tried, it's tested. You put your money into it, let it stay, let it work, let it build, and over the long term, you will see very good returns that outperform other financial markets. And now we're just going to touch on a big focus for us as a company and where we see our investors seeing the best return on their capital, which is Manchester. Going into 2024. Manchester's been a booming market over the past 10 years. You're looking at the powerhouse of the north. And as you see here, population growth continues to grow here. This comes down to a lot of reasons. Manchester is home to some of the best universities in the UK, as well as some of the best employment opportunities. So we're seeing more and more people come into the city, whether it's education, jobs, and really adding and building to that economy. Touching on that again, number of students, 100,000 students, including 27,000 international students, which in itself is fantastic. Obviously, students, they need somewhere to live, which is great, but to Manchester itself, their retention rate is one of the highest in the UK. On average, and I could be a percent or two wrong here, but you're looking at a 60% retention rate of students. So if you have such a high retention rate, it goes to show that the economy is there, it's booming, there's jobs that these students come out from university into good paying jobs. Again, they need places to live, and it just compounds on that. Average rental yields around 6.7% in 2023, very good. And just going more on the economy, and the very interesting point with Manchester, because employment opportunities are one thing, because employment pays. But if you're looking at the UK in itself, of 100 FTSE 100 companies, 85 of those offices are based in Manchester. So you're looking at financial hubs, some of the largest powerhouses outside of London in Manchester itself. Again, fastest growing job market in the UK, because what we're seeing is a lot of companies over the past few years. London, great market, but it's very expensive. Running a business in London, an office, paying staff, it's expensive. So we've seen those companies look to save on cost, make the move up north into Manchester, which has allowed the prosperity and the local economy to grow quite significantly. And it accounts for 2.7% of the UK GDP. Let's see. Just some more stats on this going into 2024. House price growth predicted by JLL at 2.5% increase. And then over a 5-year period, 4-year in this slide, 21.5%. And I think it is key to add, because across the UK over the past 18 months now, it's been a very stagnant market. Some areas saw a lot of drops, other areas held their value, and Manchester specifically being one of those. You weren't going to get rich in 2023 with all of the uncertainty that was going on, interest rates, but it just goes to show the robustness of the Manchester property market, because it was still able to see 1% in a downward market. So now coming out of that, where we're seeing more transactions, confidence, sentiment changing internationally and domestically, we do feel that there is a very small window still left where investors are able to get in at good prices, capitalize on the growth to come over the next few years before prices start to increase again. Home ownership rate, 37%. Just going more about the rents, predicted at a 4% increase in 2024, increase of 21.5% between 2024 and 2028, which the 4% is very good, especially from the double-digit rental increase that we've seen over the past 2 years. Will you see double digits every year? No, you shouldn't. It's unsustainable. But just showing that it's not only stabilized at that rate, it's continuing to grow, should show very good confidence for investors. Also going through some of the major infrastructure projects that we're seeing, multiple areas of the city centre, £4 billion Victoria North, which is a joint venture between FEC, Far East Consortium, and Manchester City Council, which is a massive regeneration project, which I'll get into on the next slide. Also, the Manchester Airport doubling in size, Terminal 2 unlocking potential for different runways, 60% of, because we're seeing such a strong increase in passengers flying through Manchester. Again, touching on the shortings of homes by 2038, 170,000 new homes are needed. Will that be able to be built? Probably not. As we've seen over the past 18 months really, developers aren't building because of the costs have increased significantly, the labor cost, importing materials, less planning permission applications have gone through. So no one's building. And I don't think this has been, especially now, it hasn't come to the markets in terms of how bad this shortage will be. And I believe that'll come over the next 2 or 3 years where there's simply not enough property for the population, more specifically in Manchester. And before I get into this slide, just go through a few more questions, just so I don't miss them. Let's see. We have Paul. Thank you for your question, Paul. Just discussing different opportunities. Are you only focused in Manchester? No, we're not only focused in Manchester. We have developments throughout the UK, London, Birmingham, Brighton, Gainsborough, Ashford and Kent. But I would say as a business going into 2024, our strongest focus is on the key regional cities, Birmingham, Manchester, as well as the capital city in London, just because that's where we see the best forecast of return, which essentially will show you the best return on your capital. And just touching on the other slide about the £4 billion project, Victoria North, which is a joint venture between Far East Consortium and Manchester City Council. This is the Falcon, which is the second phase of this regeneration site. The regeneration site in itself, it's called Victoria North, which is here, which you can see on the map in red, just outside of the Manchester city centre. And this project, going and have been myself walking on the ground, it's fantastic. You're looking at the largest regeneration taking place in the north of the UK. So when I say largest regeneration, they're literally building an entire new town. So we're seeing 15,000 new homes coming in, schools, hospitals, restaurants. It's quite amazing what they're doing there. And anyone who's able to get into this phase at such an early stage will do significantly well. And just touching a bit more on, as you can see on the points here, the 51.6 million central government investment into the new city park. It's going to be very green as well, which if you're looking around city centers, you don't see much grass, you don't see many trees. And this park in itself, which is located directly across from the development, it's beautiful views. Just showing a bit more in terms of the connectivity from the Red Bank Riverside development. Manchester in itself, you can walk anywhere. You're looking at maybe 30, 35 minutes, depending on how fast you walk, or if it's raining, I'm sure you'll get there 25 minutes. Going here, it just shows the future plan for all of the buildings that are taking place in this regeneration project. But what we're focused on today, which is the second phase, is the Falcon. As you can see right here, beautiful building, some of the units directly overlooking the park. The other side will be overlooking the internal courtyard. But and also what you can see with this developer, Far East Consortium, they're not just there putting buildings next to each other. They have architects in there that are designing the buildings deliberately to ensure that all of the insides between the buildings is a very nice place to be. There's restaurants, different things, green areas. So it has more of a community feel, which is very nice. Right. As you can see here, just giving some information on the development itself. You're looking at 20 floors, 189 apartments between 1 and 2 bedroom units. The amenities in this: bar, restaurants, private dining, co-working space, residence lounge, and it completes in Q1 2027. So a bit further of a build period, but all of the capital that you invest in here is fully protected, as Far East Consortium is such a well-capitalized developer. None of the funds that you invest would be at risk. And as you can see here, which I will go on to a bit more in the later slides, is the clubhouse. So it's very, very interesting, just because most apartment buildings that you'll see, if you have amenities, they're inside. So you'll have a gym inside, you may have a small restaurant. But if you've been to the UK, it's not Kenya property. You're not going to see very, very spacious areas. It's a different market. And when you do find these gyms that are situated inside of the buildings, they don't tend to be the best. They tend to be a bit small. So what they've done with this is separate it. So the clubhouse will contain all of the bars, the gyms, the restaurants. And what I've also found very interesting is they've left, as it is a bit further off plan, they've left a few spaces inside the clubhouse to meet with market trends, because what's popular today, especially if you're looking at this purely as an investment, what's popular today in terms of from a tenant demographic perspective may not be popular in 3 years' time. So they're looking to meet that demand, make the decision a bit closer, so all tenants, it has what tenants are looking for. Just some pictures of the finish, the specification that the developer finishes at. Very good quality, high build. Bedroom pictures here, bathroom. Another picture of the clubhouse, as you can see, rooftop, restaurants in here, gym at the bottom, windows, so you're able to look out. And again, very green, very, very green. So it's just essentially a nice place to be, somewhere where you want to be. Go through, you'll have full concierge, 24 hours a day. Co-working space. And this is really key, especially where we are today, because after COVID, everyone's working from home. That's all you did. But we've seen a switch and come back. Employers are wanting people in the office. Is that going to be 5 days a week? No. So you're looking at people working from home maybe 2-3 days a week, rather than working in their apartment. Just getting some different scenery, ensuring that you have co-working space is key. And this developer has ticked that. The gym, you can see juice bar, boxing bags, tons of equipment, and the bar, which you can see, which is at the roof of the clubhouse. So essentially, when you're looking at this development, it has everything that you need from just a living perspective. You have bars, restaurants, gym. It does tick every box. And just before we go through how the process works, we do have a few more questions that have come in. I can figure out how to get them up. You have to bear with me there. At what point do I pay my deposit? Let me see at what point. So with different developments, there's different payment plans. So sorry, just on that. Tanola had asked, how and when do I pay my deposit? So different developers have different payment plans. Some developers may be at 10% on the exchange of contracts, others 20%. But if you're speaking specifically about the Falcon, I'll get to that in the case study that we have on the next slide. And if it doesn't answer it, please do feel free to ask again. So how does the whole process work? If you decided today, I want to work with RPA, which obviously I hope you would, purchase a property. So from the outset, we would just need to get an understanding of your individual requirements, what your financial objectives are over the medium to long term, so that we can make the most suitable recommendation on a property that we have. And in some cases, it may be we can't help. We do have specific developments that we work with. We try and meet the individual requirements. So if there's many different styles of property investing, we do stick to a bit more of the boring, plain buy-to-let market, but you're not going to see these triple-digit returns over a few years. But the investments that we recommend, you'll see a consistent return without any of those periods of volatility. Going on to that, once we've identified the unit that you'd like to purchase, to complete the reservation process, we would need a copy of client's passport, a proof of address, and then we would pre-populate a reservation form for signature. There would be a £2,000 reservation fee paid to the developer. That would fully secure the unit, take it off the market while we begin the legal process. Important to note that £2,000 will be refunded to you upon the exchange of contracts. So essentially, you're looking at just a holding fee. The exchange of contracts, which once you've completed your legal process, So the legal process, you're working with a UK regulated solicitor. They act on behalf of you. They need to onboard you as a client. So carrying out KYC checks, AML checks, as well as presenting you with information on the development, the land that it's being built on, to ensure that it's exactly what you were presented. And once both parties are satisfied, we would exchange contracts, which you'd be legally bound to buy that property. The developer would be legally bound to complete and sell you that property. This usually takes place between 30 days after the point of reservation. 6 months prior to the completion, we would begin looking for mortgage options for clients. We search the whole of the market to ensure that on the completion, we have a mortgage in place and it's ready for drawdown. And then we would complete on the purchase. Most of the purchases that we have are off plan. So you're looking at build periods between 1 to 3 years. And once we complete on the purchase, you would pay the remaining funds outside of the mortgage, and we would complete and hand over. After that, again, touching on the points we went, our lettings and management company, we'd secure you a tenant, and then you can begin earning and benefiting from GBP capital growth and GBP rental income. Just a case study on the Falcon, just to show you as an example. Here we're looking at a 2-bedroom unit, 808 square feet. Again, for UK terms, very large apartment. We're not talking Kenyan terms, UK terms. That's a large apartment, especially around your city center locations. Purchase price being £663,500, looking at a 50% LTV. LTV stands for loan to value. So in simple terms, you would be contributing 50% equity and borrowing 50% from the bank to fully fund the purchase. So showing over a 10-year period, ROI 85%. This can change, because if you're looking at securing higher lending, i.e. taking out a larger mortgage and using more of the bank's money and less of your own, this number will increase quite significantly. But how the payment terms work for Falcon. So on the reservation, as we discussed, it would be a £2,000 reservation fee. This would take the unit off of the market, and we would begin the purchasing process. Once the initial legal process is through, which we went through before, upon the exchange of contracts, there would be a 10% deposit paid. So i.e. 10% of the property value plus some legal fees, which is equivalent to, in this case, £36,600, right? So from the exchange, you would do nothing for 1 year's time. 12 months after the exchange date, you would pay a further 5% deposit, which is equivalent to £18,175, right? Another year after that, you would contribute £18,175. And then 1 year after that, upon the completion, if in this case a 50% mortgage, you would contribute a further £125,523 upon the completion of the development, which just shows you your total equity contribution of £200,483. That would be your total equity invested. We've seen a lot of success in this, especially in the African market, just because of the payment plans and how it's structured. It allows you to be able to secure a great unit in the market and take a position for only 10%, while being able to build up your funds over the next few years, so you're able to secure a more expensive unit for yourself that'll perform better. And just take into account, because I know there's going to be questions, but it's 3 years off plan. Why am I going to hold my funds in there without receiving a rental income? Which is true, which is fair. But you also have to remember, you're only contributing 10% of the property value to take a position. So over the build period, you won't see rental income, but you will see very strong capital growth, because looking at Manchester as an average, it's 20.5% over the next 5 years. That's Manchester as an average. But what we're looking at doing is dissecting that, which we found the largest regeneration project. You can expect to see significantly more growth on your money than that 20.5% average. And when you do see that growth, you haven't paid in 50% yet. You've only contributed 10% in the year. So it frees your other funds up that you can invest elsewhere, still make a good return while maximizing on the capital growth in this property. I think that was, well, I know that was all the slides. If there's any more questions, be happy to answer. I know we do have just over 150 people on the call. There was a lot of questions that came through, and just being fully transparent, I'm not too sure how to work this. To pull up all the questions. Some of them come up, some of them go into a box that's not allowing me to click. But let me see what I can do. Who is the very good question? Demo asked, where do are the funds paid directly to RPA? Answer, no. So we don't touch any of client funds. When you send the funds, they will be sent, the deposits will be sent to your solicitor who acts on behalf of you. And then once paid, they will be sent to the developer's solicitor. So RPAs ourselves, we don't touch any of the client money. Right. There's a lot more personal questions that are coming through that I can't really dive into detail, but if anyone does have those specific questions, I'll make sure one of my team reaches out to you where you can arrange a meeting with myself or someone else on the team so we can go through your individual requirements in a bit more detail. Well, everyone, thank you for taking the time. Thank you for joining, and I do appreciate you guys taking the time.